Hello, everybody, and welcome to our November 2024 charity catch-up event. We are proud today to note that this is our 30th such event, one that has always been free to join, both for the clients of Burton Suite and to all comers. Whether you are here for the first time or if you're a regular, you are all very welcome. My name is Josh Kingston. I am one of the partners here at Burton Suite, and it's my pleasure to introduce to you Ed Marsh, our Senior Charity Advisor, and Cecile Gillard, our Charity Legal Manager, to speak this afternoon. The plan for the event today is that we have two key topics that we will cover over the next 45 minutes or so. Then an update for you of charity sector news that will bring us to around 1 p.m. From 1 o'clock, you're invited to stay with us for an opportunity to ask questions. But if you do need to slip away, do please feel free to do so. Please use the Zoom's chat function below at any point during the event to ask questions or comment on the content. We love it when we have a good back and forth in the chat. The button, as I said, is at the bottom of your screen, and we will pick up on any questions at the end of our session together. Captions are enabled on this event. So if you'd like to use those, you can turn those on by selecting that option on the menu bar below. These are automatically generated. They're hopefully still helpful and useful to those who would like to use them. Alongside captions, the event is also recorded. Note that no delegate faces or names will be in the recording. However, later this afternoon, we will send out an email with a link to the recording and a copy of the slides. We'd also be grateful if you had a moment to reply to that email with any feedback that you might have about this event, the speakers, or indeed any topics you'd like to hear about from us in the future. Sometimes we get questions sort of during the gaps, if you like, and incorporate that really into the structure of the next one that we do. Before we get going, I also wanted to thank everybody who was able to join us for our annual Trustees Week reception, held this year at St George's, which is just off Park Street, and we partnered with RBC Brew and Dolphin. We had a great time together. We were able to eat some wonderful food created by the Charity Square Food Foundation, and had some lovely conversations with trustees and other charity sector contributors. If you are not able to join us, fear not. We have plans in the works for some more in-person events in the new year, one of which Ed will introduce to you now. Ed, thank you.
Thank you. Yeah, just a brief mention. We do work with a number of charities that are faith charities, either faith purpose or faith motivated charities. And we are running an event in February in collaboration with the Woodlands Church family on Saturday, the 1st of February, called Faith Charities in Focus. Many of you will have come along to the previous event we did back last year. And we're looking forward to collaborating not only with Woodlands, but also the Church Growth Trust, with In Hope, and with the Association of Church Accountants and Treasurers for a special event helping to equip those involved in faith charities. And you see the tagline there: pursuing excellence in the stewardship of finances, people and property. And it will be a great event. Just encourage you, if that's relevant to you, and if that's relevant to perhaps your colleagues, to encourage people to sign on. We'd love to see you there. We actually have the Charity Commission coming down for that event as well to give us a keynote address. So we're really looking forward to that event. We really hope you can join us. Cecile, over to you.
Thank you very much, Ed. So good afternoon, everybody. Lovely to be together again to explore topics that matter to our beloved charities. And we're going to start by thinking about trustees' decision making and what helps trustees make good decisions. So if we could have the next visual, Ed, thank you. So the Charity Commission has recently refreshed its guidance on trustee decision making because making decisions well will help trustees govern their charities effectively, meet their legal duties, and reduce the risks of harm in charities. They hope that the new version will be clearer and more helpful, and they are keen that more trustees will read it. Their research suggests that actually only 74%, I'm sorry, say this the other way around, only 74% of trustees, I'm sorry, I'll start that again. I beg your pardon, falling over words here. Suggest that as many as, that's what I'm trying to say, 74% of trustees use other sources of information much more frequently than they would look at Charity Commission guidance. That's generally on anything. So those are some of the reasons, plus it's clearly wise to refresh these things from time to time, but the changes are also being driven by the Commission's views on areas where trustees can and should improve how they make decisions. So some things that we could all be doing better in the Commission's view. If I could have the next visual, Ed, thank you. We need, I think, to understand the bigger picture context here for trustees' decisions. First and foremost, the charity's charitable purposes are paramount. A charity exists because of its purposes, and its trustees have a fundamental legal duty to act in a way they honestly believe furthers those purposes for public benefit. That is the overarching context in which we do everything, and it's that duty context for everything our trustees do, including what decisions they take and how they take them. So charitable purposes are paramount in the whole area of trustee decision making. The Board of Trustees is the charity's governing body. It's collectively responsible for strategic leadership and direction in the charity, and together our trustees share the highest level of authority in and responsibility for our charities. So trustees set policy for the charity. They determine its strategy and its priorities. Significant decisions in the charity therefore need to be taken collectively by the Board of Trustees. For example, deciding to begin, substantially change, reduce, or end a major activity. That's a strategic decision the trustees would need to take. If there was a possibility of the charity acquiring or disposing of land or buildings, again, that's something you'd want a trustee decision on. And our trustees should be the people who are making the major decisions in setting the funding strategy for the charity, approving all its major policies in all the important areas like safeguarding, making grants, fundraising, and financial management, of course. Trustees and other people in the charity, like its senior management team, and indeed its members and volunteers, its supporters, and all other stakeholders in the charity need to understand this major contextual point so they can recognise and respect the right of trustees and the responsibility of trustees to make significant decisions. And these principles apply to all charities and all trustees. So it doesn't matter what your purpose is, what your driving ethos is, what your legal form is. Applies to a charitable company, a members association, a trust, a CIO, or indeed any of the more rare legal forms of charity. This is the fundamental legal setting in which charities operate and are governed and led by their trustees. And when this refreshed guidance was made public, the Assistant Director of Policy at the Charity Commission, a chap in quite a senior role, a man called Sam Jackson, said this: making decisions is an experience that unites all trustees, whatever size your charity or sector you work in. It's critical to your charity, its governance, and its people. So thanks, Ed. If we could move along. Trustees' decisions are made by trustees. Although that might sound self-evident, what it means is we need to understand who has which role in a charity. So we need to accurately identify who are the people in this charity who've been formally appointed as the trustees. There'll be lots of other people in the charity and they'll have other roles, but we need to distinguish those from the trustees, and particularly we need to distinguish the important but different role of the senior management team, they're carrying out the day-to-day management and they're accountable to the trustees, but they're not part of the board. In the vast majority of charities, with extremely rare exceptions, senior management staff are not serving as trustees. They're not part of the board, they're not themselves trustees, and therefore, as managers, they're not taking part in trustees' decisions, they're not actually being part of the making of the decision. And of course, that means they don't have the right to vote at board meetings. Also means, where I mentioned that whole respect and that whole issue around boundaries, that they need to respect the boundaries there and the right of the trustees to take decisions in the governance of the charity. The CEO and the other managers will often provide key information to the trustees to help them make board decisions. And the CEO and sometimes other managers might be actually present when major decisions are taken by trustees, attending at board meetings where they're providing information, giving the trustees their views on likely impact and outcomes of proposed decisions, but they're not part of actually taking those decisions. So trustees take trustees' decisions, and they do it collectively. They reach a collective decision after they've considered and debated the issues, then they make the decisions together. Generally, most decisions are taken at board meetings, and the legal rule here is that agreeing a majority view on a matter provides a binding trustees' decision. Some trustees may have, in all conscience, disagreed with the proposal and quite properly expressed their views as to why they disagreed. But if we've got a majority decision in favour, majority vote in formal terms, then the decision is binding and those who dissented must respect that. The charity's constitution should set out some important procedural rules for how board meetings are conducted. Things like who takes the chair, how many trustees need to be present to make this a valid meeting, which is legally competent to take decisions, the quorum. Important one understands what the rule is in your charity. That certainly varies charity to charity. And it's important to know those procedural rules and follow them to make sure that decisions that are taken by trustees are legally effective. There might be other options for trustees to take decisions, and these are more rare ways to take decisions. The one that perhaps you might have in your constitution, and you can't do it unless you've got power in your constitution, is to take a unanimous written resolution. Now, that's available to some charities. It's only available if they've got the constitutional power. And it's only suitable to do where there's no need for a debate, where this is a necessary formal decision that taking it quickly in writing may be the best and most convenient way. So if a trustee's already been appointed and it's been agreed that that trustee is going to become one of the signatories of the bank account, done all the due diligence after that decision was taken, then perhaps a written resolution to pass the necessary authorities for that person to become a signatory, a written decision might be an appropriate way of dealing with that. But this is not for normal, proper, rigorously debated decisions. And notice one other thing. The word unanimous has but one meaning. Everybody signs it and agrees. This is not majority decision making. If you're doing trustees' written decisions, you've got to have unanimity with everybody committed to the decision. So those are some of the important things about how the trustees' decisions are made. Let's move on to look at some really core legal principles. If we could move across it, thank you very much. Now, the Charity Commission guidance reiterates the importance of 7 underlying legal principles that have a relevance, a really important relevance to trustees' decision making. And in a nutshell, these are those 7 principles. The first one is that the trustees must always act within their powers. Now, trustees have general, inherent, unwritten powers as the governing body to make decisions about the charity. It's a basic fundamental legal principle. But when they're using those general inherent powers to make decisions as a governing body. They need to do it in the best interests of the charity's purposes and with due regard to the rest of these principles, in order that they are acting within those general inherent powers. So if they had wanted disregard for these principles, they would be outside of those general inherent powers, not acting within them. If, of course, they're using a specific power set out in the charity's constitution, and that's much more common to have some specific powers in older charities than it is in more modern charities, or in more modern constitutions where constitutions have been updated. But if they're using specific powers in the constitution, then of course they've got to check and understand the detail of the powers and make decisions within the parameters of the one that they're using. Also, of course, in some situations, there'll be some special legal limitations on trustees' powers, like a requirement for prior charity commission consent to some decisions or actions, or the need to obtain and consider particular advice on a proposed decision. Secondly, the trustees must act in good faith. They must have a genuine, honest aim to further the charity's best interests, and they must be open, fair, and honest in the discussions that lead to the conclusion and the decision. They must share with their fellow trustees any information that's relevant to that decision. For example, disclosing any links they have to another organisation or an individual that the charity is considering working with or using as a supplier, or perhaps seeking funds from. And the trustees must use their powers for the proper purposes for which those powers were intended. That's all relevant to acting in good faith. Must act in good faith, those factors are relevant. And before we take our decision, we've got to be sufficiently informed. We must find relevant information. We must consider sufficient amounts of the right information to help us evaluate the likely impacts and outcomes of our decision, weigh up the risks and balance them against the projected benefits, and of course, financially, assess the costs properly and consider those alongside the value of the proposed action. Yes, financial value, but also the charitable value. What are the charitable outcomes we consider this action will achieve? And the Charity Commission is quite clear that trustees can and they should take professional advice where it's appropriate, but that they need to use advisors with the right skill, knowledge, and experience and qualifications to talk with a charity and its trustees around these matters. So if I may dare say so and sound slightly less than humble, people like Burton with strong practical and technical experience of charities to give you that kind of advice. Sometimes it might be appropriate to consult with stakeholders about their views on some proposals, but a word of caution around that. It's only going to be relevant in some scenarios, and the Charity Commission quite rightly points out, and I quote, "The final decision is for you as trustees to make in line with your trustee duties." We're not talking about an election here where everybody, all and sundry with the slightest interest, has a vote. We're talking about the trustees' responsibility to use information to take decisions that they have been sufficiently informed in taking that decision. Trustees have to take account of all relevant factors. What's relevant will vary circumstance to circumstance. Professional advice might help identify areas to consider. So things like, what's driving the need to take a decision on this matter? How significant is this decision? What other options should we be considering? And before we actually decide which course of action is the right one in the circumstances. Likely impact on direct beneficiaries is key relevance in most cases. For most cases too, thinking about the public benefit, what will be gained by way of public benefit if we take this action, but also, of course, balancing that against what benefits might be reduced in other areas of our charities' activities if we make these proposed commitments. Impact on reputation is likely to be relevant too. Likewise, short and long-term impacts on the charity and the risks and the benefits of not only the relevant options, but choosing not to take any of them, maybe not to do anything at all. We thought about a course of action, we weighed the options, actually we decided it wasn't right to do anything. In weighing costs, trustees need to think about whether we've got necessary funds now to carry this into reality if we take this decision. If not, how could we address that? And of course, also think about possible costs or penalties if the expected consequences of the decision are not as we thought they would be, or if later we need to change things or even end the proposed arrangement. The flip side of thinking about relevant factors is we must disregard irrelevant factors. And again, it's for the trustees to decide what's irrelevant here and make sure that the irrelevant is not weighing in on the decision. I said one of the reasons the Commission's changed some of these things in this guidance is because they're concerned about things, and here comes a whopper that they're concerned about, managing conflicts of interest. This is an area where they're quite sure trustees need to improve awareness and performance. Conflicts of loyalty or interest must not actually improperly influence trustee decisions, and the perception of improper influences can also harm the charity, and the Commission's rightly concerned about all of that. Too often, I'm afraid they're seeing trustees being improperly influenced by their own interests of people or organisations they're connected with, family, the body that appointed them, other organisations they support, organisations they work for. For example, sometimes the interests of other charities. Sometimes, and this has certainly been a factor in some of the recent, to be honest, very, very concerning examples that have come into the public domain, not to mention what the Commission is having to work on privately and can't yet make public, being unduly concerned about somebody's reputation. And I'm thinking that's more important to protect than to consider the right factors and make the right decision. Remember, the Charity Commission's primary expectation is you will identify conflicts of interest and loyalty, you'll record them, and your first port of call should be to avoid them. Only your second possible option to consider is managing them properly and still going ahead with a conflict in place. Normally speaking, the best way is to avoid it. Don't let it happen. So don't make the decision in a context where a conflict does or could influence. And legally, you're required to make a reasonable decision. That's using reasonable skill and care to reach a rational decision. Take it for good reasons. Take it because it's in the best interest of the charity, and take it within the, quote, range of reasonable decisions that could be taken in those circumstances. Also important to remember the need to think about the outcomes of particularly major and long-term decisions and keep them under review. There may be a need to come back and take further decisions as we manage, say, a long-term project like restoring an ancient woodland, creating a new wildlife sanctuary, repairing a heritage building. But that does not mean that dissenting trustees should keep trying to get us to reverse the original decision. It's a really important distinction there. Other things you should be considering, if we could flip us across it, thank you. The importance and the value of honest challenge in trustees' discussions. That helps make a good decision. Respect for disagreement, but not dispute, not internal infighting. The latter can be extremely damaging. Really make sure you've got good records, what information was considered, what conclusion was reached, what was the decision, and who was going to do what about it. Those matter because they make everything clear to you, they make everything clear to people that come after you, they make sure there's a continuity of action on decisions, and actually they're a protection lest any query be raised about whether or not things were done right. Sometimes you've got a need to communicate well a decision to a wider audience, and that can be managing, quite difficult relationships and disappointments in people when you've had to take some hard decisions. Some plenty of examples of that at the moment, where trustees are having to prioritise in difficult times, and maybe sometimes things have to be different to how they were before. Not everybody will be joyous that things have changed. So sometimes communicating decisions to a wider audience is something you need to think about. If there's going to be any delegated decision making, absolutely essential you delegate properly. you as trustees ensure rigorous oversight and effective accountability. That's a whole topic in itself, really, and for another day. And please use expert help. We're really, my Burton Sweet colleagues and I, are always ready to support charities and their people understand how trustees can make better decisions. We're really happy to give trustees and the staff advice about these legal principles and rules, the impact of the Constitution, how you can equip trustees with the right information and skills they need to make good decisions. And of course, we're happy to discuss relevant Charity Commission guidance with you. We're always happy to come to board meetings, to be available by phone or otherwise, and indeed, where necessary, to help you upskill as well. Plenty of ways to get in touch with us. All of those we'll point out to you today and in our follow-up material. So I hope that's been helpful. I'm going to hand over to Ed now, because he's going to look at something which I bet is relevant to all of us, which is improving our charities' finances. Ed.
Thank you so much, Cecile. Good afternoon, everybody. My name's Ed, if we've not met before. It's great to have so many people with us this afternoon. Just a reminder, it's great to see already in the chat, there's a number of observations, comments and questions that we'll get to a little bit later on in our event. There'll also be an opportunity to ask questions out loud if that's what you'd like to do later on as well. So do make the most of that facility. But as Cecile said, we're thinking about improving your charity's finances. And the reality is that certainly from our point of view as a team, we have seen an increase in the numbers of charities who have real concerns around finances. Perhaps they're experiencing a worsening of the financial position they're in, or the prospects that they have for the future. And certainly from our point of view, when it comes to looking at sets of accounts, when it comes to signing those accounts off, we found that we've needed to give much closer consideration to the work that the trustees have done to be able to kind of talk about the future prospects of the charity, to be able to talk about viability, to talk about the charity being a going concern in operation for the foreseeable future. And so certainly that's given pause for thought for many. Now, why might that be? I mean, we are coming on for almost 5 years since the start of the COVID-19 pandemic. In many ways, I think people's expectation might have been that there'll be a lot of charities that struggle financially in that season, and of course many did. But of course, probably unsurprisingly, what we're seeing is a bit of a delayed effect of that, but also the general economic situation that resulted. I'm sure that for many, the effects of the cost of living crisis, even though we started talking about it 2 or 3 years ago, are really now only most being felt by many charities. Rising demand for services, rising costs, particularly wage inflation, a reduction in available sources of funding, that public support perhaps has dropped off for particular charities because of the more pressing situations of workers and supporters for the charity. I mean, every charity is unique. Every charity has its own story to tell. And so particular charities have had particular issues with perhaps a particular funder no longer being able to continue to sustain the work that they're doing with that charity. So I don't know what situation your charity is in. It might be that your charity's finances are super healthy at the moment, which is great. I think there's still some really important principles for you to take on board in this session. And especially later on, we're going to be talking a little bit about prevention, sort of maintaining health for charities to prevent difficulties. But it might be that one of the reasons that we have record sign-ups for this particular event, it might be because actually many charities are at the moment in a position where they're in financial difficulty, or they're concerned about what the future holds. We'll talk a little bit later on about the budget announcements, and it's absolutely true. You might have done the sums already, but for many charities, especially if charities that are employers, there are some significant extra costs coming our way next year. And I've spoken to a mixture of charities, anywhere between, for particular charities, anywhere between increased bills of 30,000 to 100,000 even for some charities. And that's not the kind of money that people have hiding under their pillows. So there are significant challenges for the sector at the moment. So whatever situation you're in, I guess the question is this: what do we do? What can we do about those financial difficulties? And in the same way that Cecile's highlighted refreshed guidance from the Commission, just recently the Charity Commission refreshed CC12, which is called Improving Your Charity's Finances. It has 4 parts to it. there's a section that gives charities advice about what to do if your charity is in financial difficulty, but then some very important and specific advice about dealing with insolvency or charities right at the risk of insolvency. And there's also a new checklist which is helping charities kind of understand whether they are at risk of insolvency. And I think this guidance has all been about how can we, as Cecile said earlier on, get charities to read our guidance. How can the Commission make sure that the tools are in the hands of trustees to be able to know what questions to ask and know what to look at? I think it's perhaps just important to say, as we talk about some of these principles, that this whole issue of insolvency is very, very important indeed. It's a very important issue. If you believe that your charity is insolvent or may soon be, then there are legal procedures to follow. There are certain duties that kick in, and it's really, really important to take professional advice. And so this guidance is there to help you to know what some of those steps are. And really the first step within that is you need to make sure that you take professional advice, because your whole realm of decision making, your whole way in which you proceed is vitally important. Otherwise the consequences can be quite nasty. What do we mean by insolvency? Well, it's extremely complicated, and I am not an insolvency practitioner, and I never want to be an insolvency practitioner. It's a very complex area of law, and it has different implications depending on the structure of your charity, how it's set up. But it is very simplest, just looking at things in a very simple definition. Then insolvency is when your charity can't pay the debts when they are due, the debts that it faces when they are due. It can't do that. It doesn't have the cash to be able to do that. Or a situation where your charity does not have enough assets to cover liabilities. Liabilities are greater than assets. There's much more to the considerations than that, but it's absolutely vital that as charities we have a grip on when this situation may be kicking in for our charity. Perhaps the financial difficulties are particularly acute, and so it's important to keep an eye on that. I mean, at a very basic level, a fundamental first step is that you need to make sure you have a very clear picture of your charity's finances. You can't understand and you can't act on what you cannot see and what is not in front of you. So that's absolutely fundamental. You need to get clear on the picture of your finances, and particularly when there are financial difficulties, you need to be clear on these three main areas. What is your cash position? What cash do you have in the bank? And then in particular, what are some of your upcoming obligations, which are going to mean that cash is needed to be able to meet your debts as they fall due, to meet the ongoing operations of the charity? But then, of course, to be able to figure out whether your liabilities are greater than your assets, whether your assets are going to be sufficient or not to cover your liabilities, you need to be able to know what your balance sheet looks like, to know what assets and liabilities you have. So that's absolutely critical. And just to say again, there's that one-page insolvency checklist that the Charity Commission are now giving as a chance. If you're concerned that we're not there yet, but we feel like we're on our way to insolvency as defined, then do check out those resources. But I can't say this often enough. Don't just carry on and hope for the best. Don't just kind of blindly, well, let's do a little bit, tweak here and a little there. If you fear that you're at risk of insolvency, getting professional advice is absolutely crucial to make sure that the trustees are able to fulfill their legal obligations and their duties. There can be some very nasty consequences from not doing that. But hopefully you are not at that stage, and you are not on the journey towards that stage. If it's clear that you're not insolvent as a charity, then it might still be that you're in some measure of financial difficulty. And really, the same core principle here applies, that same fundamental position. You need to have a clear picture of your finances. There needs to be a clear picture of the resource needs that the charity has, both now for current operations, but also for future plans. And that information, it needs to be clear. It needs to be, you need to know what you're looking at. It needs to be accurate, and it needs to be up to date. Of course, if you've been involved in particularly preparing financial information before, you'll know that there is a trade-off between accurate and up-to-date. There is a trade-off between getting everything kind of completely and utterly, everything in the right place to the nearest penny, and it being available quickly enough to be able to make a good decision on. There is a trade-off, and there's a need to find that good balance between accuracy and timeliness when it comes to financial information. Cecile has already mentioned this when it comes to decision making, but it might be that your charity has an expert in charity finances, either on your board as a member of your staff team. But it is vital to remember that every trustee still has joint responsibility and accountability for understanding and managing your charity's financial position and performance. And so it's important to get to grips with your charity's finances. If you are the charity expert, if you're the one, the voice into your charity, that you feel like you're the one that most knows what's going on, so you have a responsibility to help your colleagues understand. This might be the first and ever last time in 30 charity catch-ups I've ever quoted Albert Einstein. But he famously, apparently, said this, if you can trust the internet: everything should be made as simple as possible, but no simpler. Everything should be made as simple as possible, but no simpler. And that's very true of financial information too. Let's make sure that it is accessible to our colleagues. There is a degree of complexity in conveying financial information, of course there is, but let's keep things as simple and as clear as we possibly can for everybody's benefit. But if you are a charity and you are concerned about your finances and you are identifying something of financial difficulty because of what lies ahead, then there is no substitute for getting on it as soon as you can and being very proactive. Once you've been clear on your financial position and your prospects going forward, there are a number of possible actions that you can take as you are proactive in areas. So just a kind of a few ideas here. Well, it might be you want to think a little bit around your income streams. It might be that what you need to be doing is finding additional sources of income somehow. That might be about contacting the charity's supporters and asking if they can increase their regular giving if you're a charity that's funded by regular donations. It might be that you launch a fundraising appeal, and I know that for a number of our clients, they've got to the stage where I think that the time is now that we are going to launch a fundraising appeal to make sure that our charity can continue and get over this hump. That's really important. You pay attention to the guidance around fundraising appeals and make sure you set that up in a helpful way. It might be that you also perhaps you receive funding from a grant funder of some description, or it might be a case of looking closely at the contracts you have, making sure that there's that clear understanding of what are the agreements we have, what flexibility do we have to be able to see that funding extended or to see that funding grow in some way. What are the additional sources of income? Are you making the most of all the reliefs? Are you making the most of gift aid? Are you making the most of all the ways in which your charity can raise income? Good, clear communication to the charity stakeholders is really, really vital to be able to identify those things. It might be on the expenditure side that you need to take a good, long, hard look at your expenditure commitments. What is it that is non-essential that you could either pause or you could stop? Be really clear though that quite often there's costs of cancellation, there's costs of pausing particular contracts, but have a good look at those. How might you be able to reduce running costs at all? It's challenging because many of us in the charity sector have been trying to cut costs and streamline things for years and years, but to continue looking at that. How might it be that the use of technology perhaps might be able to reduce the running costs of services that we provide? It might very well be that the difficult decision we need to make, bearing in mind the decision-making guidance and the principles we've talked about, that actually for the long-term benefit of our beneficiaries, we need to pause or stop some of the services we offer now to our current beneficiaries to be able to. It might be that we need to, for a time, refer our beneficiaries to another charity that's providing similar support. It might be that we need to team up with other charities to be able to sort of find ways in which perhaps they've got similar purposes to ours. And how do we share facilities and share resources? How do we collaborate? It might be a case of speaking to the charity's lenders if you borrow money and say, how can we restructure our finance so that our outgoing finance costs are lower, perhaps through whatever method you can. And then just along the bottom there, it's really important to be clear on the funds that you have and the assets and liabilities. Review your funds. Do you understand what your funds are? Do you understand any restrictions that there are around your funds? Do you perhaps have some designated funds set aside for a particular future project that you could potentially release to be able to handle the short-term economic challenges for the charity? Be really clear about what funds you had. If you've got funds that have particular restrictions, make sure you understand there is restrictions, because you need to you might cause more difficulty by quite often charities end up inadvertently borrowing money from restricted funds that's not really not replaceable, and end up with a nasty kind of breach of trust situation under charity law. You might to think about your assets and how you use those assets. It might be as dramatic as needing to sell a property that you have, or to sell investments to be able to meet your day-to-day needs as a charity. Obviously, as you are making those decisions, you need to make sure you're applying that decision-making criteria very clearly to make sure you keep the best interests of the charity, both now and in the future, in mind. It might be that you are a permanently endowed charity, and this is not something to take lightly, but there are the ways in which you could explore potentially borrowing from permanent endowment. But there are very important parameters around that decision that you need to be making. So do come and ask us if that's something that would be something you would consider. But be proactive and continue to be proactive. Rinse and repeat. This is not a one-time discussion. This is something you need to keep coming back to. You need to keep reviewing, keep planning. You need to keep seeing whether the actions that you've taken are having effect on your financial position. It might be that you need to start monitoring much more closely and much more regularly the financial situation of your charity. It might be that ordinarily perhaps the trustees might receive quarterly accounts. Well, is it time now to be receiving monthly financial information to keep on top of things more? It might even be receiving weekly information about a cash flow situation or something like that if it's getting quite critical. You need to, certainly as Cecile said earlier on, to keep a clear written record of the actions taken, for the reasons behind those actions, for particularly any advice that you have taken as you've sought to take steps forward, and some of the outcomes and the fruit that is bearing from the work that you've been doing. And be super aware as well that if you prepare your accounts, or you have your accounts prepared under the charity SORP, then you will need to confirm in your year-end accounts whether the charity is a going concern. In other words, whether the charity is able to continue operating for the foreseeable future. And you'll need a solid basis to be able to make that justification and that decision. So have a think about how you document and how you the proactivity which you go about the work that's needed. And of course, this might ultimately lead to all kinds of different outcomes. It might be that your charity will continue operating, perhaps even in a slightly different way. It might be it leads you to explore merging with another charity and going through the important process of doing the careful due diligence around whether that should be the place, whether that is in the best interest of your charity. And then, of course, it might very well be that for some charities, they need to go about an orderly closure. And again, a closure is not just something that happens, it's something that needs proactive and careful planning and thought and happening at the right time. But it might very well be that that is an outcome. Perpetuating a charity forever and ever is not the whole point of what you're there for. It is important to find the best outcome. And then just to reinforce what Cecilia said, you need to make sure you keep your charity's purposes and your core duties at the absolute heart of all actions and proactive planning and decisions and corrective actions that you're taking around your charity's finances. Just briefly, before we look at some news items, prevention is absolutely better than cure. And so even if you're a charity that is not at the moment in financial difficulties as you would see them, you need to think about how you can increase the health of your charity's finances. And here's just some ideas here. Again, you will receive a copy of these slides to be able to have a record of this, but regular and robust financial information. Of course, as we've said already, understandable financial information, as simple as it can be without being any simpler. That you look at that performance against budget. Critical, especially if you're used to looking at finances, that you're not just looking at income and expenditure, but you are looking at the cash position and a cash forecast. You can have a charity that is profitable in income and expenditure terms, and yet goes under because it's run out of cash, and so it's vital to monitor cash position, to make sure that you are monitoring the balance sheet and fund accounting position, to look at CC8, prioritize looking at internal controls and taking steps to reduce the risk of fraud, making sure that risk management is a very, very real and alive process for your charity, particularly looking at CC26 guidance around the risk management process, to make sure that you take professional advice before entering into any significant commitments, particularly around buying property or borrowing money. There are some legal requirements around making sure that you have taken appropriate advice. To actively use and monitor your reserves and your reserves policy. Reserves are an asset to manage. And so to make sure that you are bearing that in mind, it may very well be that one of the proactive decisions you take is to be able to dig into your reserves over the next period of time. It might be that if you're in a position where your charity is relatively healthy, could this be a time where we need to prepare for the worst by making sure that we have adequate reserves for the future? And then I can't say this importantly enough, even if you are not concerned at the moment about your financial position, but always make sure you have in mind that you need to be very quick to take advice when that position changes, when there are particular financial difficulties. And again, the Burton Sweet team are here to help. We're here to talk to you a bit about financial management. We're here to talk to you a bit about your ongoing, some of those ongoing actions, some of the ways in which you can prepare great financial information, and of course, report well in your annual accounts on the going concern state of the charity and the work that you've done to support that. So do get in touch. And Josh, I think over to you.
Thank you, Ed. So much good things to think about there. I have the pleasure. Oh, yeah, if you could go to the next slide as well, Ed, that'd be great. I have the pleasure of just spending a little time with you on the budget. I'm sure that you've all been absorbing the detail of that budget, and as Ed has suggested earlier, perhaps doing some calculations on its impact to you personally, but also significantly, especially here, to your charities as well. I'll start with a silver lining, and then we'll come to the crux of it. But there was one unexpected bonus in that was announced by Rachel Reeves, and that was the budget will now be every 12 months rather than every 6. So good that we don't have to keep shifting and changing. However, it may be a bit of a long year, as we'll explore together now. So the Chancellor, Rachel Reeves, released her autumn budget on the 30th of October. Amongst her key mantras were rebuilding Britain and fixing the foundations of public finances whilst avoiding austerity. Charities and civil society organisations did not feature significantly in the budget, but some of Ms. Reeves' announcements will certainly affect the sector. The main impact for charities that we work with will be the combination of the legal minimum wage increasing and an increased employers' national insurance burden. And I'll just get into the details a little bit now. So the legal minimum wage for over 21s will rise from £11.44 to £12.21 per hour from April 2025. The rate for 18 to 20-year-olds will also increase to £10 per hour. Whilst a sort of a fairer wage can really help some of the beneficiaries of our charities, this measure will also, of course, increase the costs of employment for charitable organisations themselves. And obviously, we're already feeling the pinch over recent years. From April 2025, so April next year, employers will have to pay employers' national insurance on workers' earnings above £5,000. So they've moved the boundaries a bit from 9,100 is where it was before. Additionally, a double whammy, they've increased the rate for employers' national insurance from 13.8% up to 15%. perhaps like you, I initially looked at that and went, oh, it's not too bad percentage wise, but the banding has made a real significant difference to charities. In the other direction, the employment allowance, which is the amount that you can reduce your employer's national insurance burden by, will increase from 5,000 up to 10,500, which will allow some smaller charities here today to reduce their national insurance liability. Once you get a little bit larger, have a few more employees, the overall burden will increase. And the threshold for that employment allowance has been removed as well. So do look at the detail on that one. So alongside the minimum wage increase, employers' national insurance contributions will generally contribute to higher costs for employment. It's going to create a strain on charities and indeed other organizations. And it is believed that this will lead to suppressed wage increases going forward. And, we'll all be having to make quite hard decisions in terms of employment. So there'll probably be a bit of a reduction in employment overall as well. Charities will need to be focusing on balancing your budgets whilst also continuing to have that focus on supporting your beneficiaries. A little point off of Ed's earlier is that, you need to maintain that focus on your purposes, and your purpose is to assist your beneficiaries. We're all going to be very fond of the teams that we have working for us, but the focus is particularly on those beneficiaries. Over 1,000 charities, including the NCVO and the ACEVO, published an open letter to the Chancellor expressing their worries about how the change to employers' national insurance will impact the voluntary sector. There are other items in the budget. I focused on those two that will affect your beneficiaries. Things to think about would be the increases in public sector budgets, although that is mainly in line with inflation rather than perhaps the step change some would have wanted. Small increases to universal credit and a continued triple lock on pensions, balanced against the loss of winter fuel payments, which will of course have an impact on people as well. As a side note, it's worth noting that perhaps for donors, inheritance tax changes and freezes will increase the pool of funds being charged at 40% tax. Without going into the detail, this may have a positive impact on using the relief gained from charitable giving in estates. Or at least for those here, it might be an opportunity to talk to donors about these changes and whether legacy contributions would be an option for them. Thank you, Ed. I think I'm handing to Cecile.
Thank you very much, Josh. I want to say two things now. Firstly, briefly on safeguarding, there's been some awful cases in charities and wider society causing great concern at the moment. You can't have failed to notice them, and they are a reminder to us in the charity sector. Remember, this also, of course, includes faith-motivated charities and faith purpose charities. We've got to take seriously the safety and welfare of everyone that the charity comes into contact with. I think that there's a clarion call here to review policy and procedures, increase awareness of the subject, make sure everyone knows how to report any concerns, and make sure that you as a charity make prompt external reports to police and other relevant agencies like the local authority safeguarding team. Record that you've done that and follow up with those agencies. Make sure they've had the report, stress the need, in your view, for them to take action to investigate properly. Record that you've done that. So that you can evidence you did everything you could to check the issues were being properly investigated and the right actions were taken. That's first and foremost to keep other people safe and to address any harm that has been done and stop repeat harm. And it's also, of course, for your own protection as organisations. Some of the criticism of some organisations at the moment, in part, stems from the fact that they can't demonstrate whether or not they did anything, and if they did anything, what it was and whether it was adequate. Second thing I will just touch on, you must be aware probably that the Charity Commission's inquiry report into the Captain Tom Charitable Foundation has just been issued with very significant criticism of trustees and highlighting very significant failings that the Commission has concluded happened. We may well come back to touching on some of the themes from that, I think, in future events. And please let us know what themes you'd be interested in. But I just wanted to say one positive thing, if I may. There is fundamental truth in a comment on the wider situation here by the chair of the Charity Commission. And as the report was released, he has said, and it's documented on the Commission's website, that reflecting on the role of charities in society more generally, quote, charities represent the best of society, bringing people together, supporting the most vulnerable, strengthening communities. It is important to remember that their work is underpinned by trustees, most of whom are volunteers, and most of whom fulfill the role with passion and integrity. That is a fundamental truth. In all the darkness, let us hold on to it. Ed.
Thank you, Cecile. Just in a moment, we're going to take a chance to answer a few questions, either ones we've had in the chat or we've received in advance of the event. It is coming on 1 o'clock, and to answer these questions, we'd like to go a little bit beyond 1 o'clock. So do stay with us if you would like to. If you need to slip away, we perfectly understand. If you do need to slip away, thank you so much for joining us. I'd like to just mention again the event we mentioned earlier on Saturday, the 1st of February. So a booking from now, Faith Charities in Focus. If you are a faith charity of any sort, then we would love to welcome you to this in-person event that we're running in collaboration with the Woodlands Church family and also other organisations, Church Growth Trust, In Hope, Association of Church Councils and Treasurers. And we also have the Charity Commission coming along to that event as well. It's going to be a great event. Last year when we ran it, we had 150 delegates there, and it was a great chance to meet other people and be involved. So do come along to that if that's relevant to you. But we also have other in-person events planned for next year too, which we'll let you know further details about once we know those details as well. So thanks so much for being with us. I'm going to hand over to Josh to take us through some questions and answers.